Good morning, everybody. It is Monday, June 8th, and I'm Sarah Force, and I have a guest today on the Monday Mortgage Minute. This is Sean Wilder. He's Sean, the Short Sale King Wilder. You can find him on Facebook at facebook.com/Sean P. Wilder. And he has I'm sure you can just Google him as well, Sean Wilder, Short Sales Connecticut, and he will come right up. Right, Sean, what's your website?
It's ctlms.com. But yeah, just Google my name and I'm all over the place.
Great. And that stands for Connecticut Loss Mitigation Services, correct?
Yeah, Loss Services.
Okay, I wanted Sean to be on here today because a lot of homeowners I talk to consider the option of a short sale. And often that is after they've tried to modify their mortgage. They may want to keep their home, or at least they think they want to keep their home, and modifying the mortgage doesn't necessarily work. And then the bank says, well, you don't qualify for modification, but you might qualify for a short sale. That's one of your loss mitigation options. So Sean, do you mind running us through some of this terminology? First of all, what does loss mitigation mean?
Sure. So once the loan's not current on payments, the bank's got to figure out how to fix that issue, how to resolve the delinquency. And the different options that are available to the homeowner are what the bank calls loss mitigation. For them, they're trying to mitigate the loss or reduce the loss or not taking any loss at all. And the department that reviews those things is called loss mitigation.
All right, great. And I always interpret that as the bank is trying to protect itself.
Mm-hmm.
You know, is that somewhat of an accurate characterization that it's their losses they're trying to, because if you're not paying a mortgage then they have to start foreclosure, then they end up with the house on their hands, right? So I always think of it as the bank trying to protect itself. Is that a little cynical, or is that more accurate?
No, that's 100%. The bank only cares about themselves. Even the options that they have available for homeowners to assist them in avoiding foreclosure, they're all designed to benefit the bank more so than they're designed specifically to benefit the homeowner. The bank's trying to not lose money or lose as little as possible.
Okay, great. So I think it's important to understand that when homeowners are trying to engage in these loss mitigation options, just to understand it's really the bank trying to, save its profit margin. And so what is a short sale?
So short sale is if you're looking to sell the property, but the value of the property is not enough to bring an offer that would cover the payoff to the mortgage, and if it's delinquent, all of the costs and whatnot that are included in that, as well as the costs of the sale. So like the realtor's commission, closing attorney's fee, conveyance taxes, any of those types of things. If the sales price won't cover all of those, then it's typically where you'd be looking at the possibility of a short sale.
All right. I think when people come to me and they say, we want to do a short sale, or and first of all, I want to make sure that people understand what that means. I say, okay, so where will you go? And often they don't quite understand that. And I often explain, short selling your property means you're selling your house and you're moving out. And do you hear from people? I guess by the time they find their way to you, and I should say that most realtors in the state of Connecticut, and even up in Massachusetts as well, you do some up there, know who you are, right? So if someone's considering doing a short sale, you should talk about it with your real estate agent. Find out how much you owe on your house, how much your house is worth, right? If you owe this much and your house is worth less, that's the situation for a short sale.
Right. And I see that situation also with the moving thing. And a lot of times that comes from the homeowner's been trying every option to save the home. And like you said earlier, the banks come to the point where they said, there aren't any options left. There's nothing else that we can do, but a short sale may be an option. So it's the bank that put them down that road, and they may not yet be thinking, well, that means I have to actually move at some point.
Yeah, I think that it's the response I get, which is, oh, we'll just do a short sale. And then I find out that they don't really quite understand that it's selling and moving out, that they think it's another option for keeping the home. So it really is not, correct?
It isn't. And, one short sale is one of the liquidation options. The lenders have home retention options and liquidation options. In liquidation, you have short sale and deed in lieu of foreclosure. In either one of those scenarios, the loan's going to be settled and done and over. The bank's going to get whatever money they can get, or they're going to get the property in the case of a deed in lieu, and then they're going to sell it and get whatever the money they can, and they're done with that account. Whereas with home retention options, they're reorganizing the loan and a modification or something like that, and that homeowner's still going to be a customer of theirs. They're just trying to get them on track. So home retention options, obviously the homeowner's keeping the property, they're going to continue to live there. They're just rearranging their debt somehow in order to be able to afford to do that. Once you get into liquidation options, short sale or deed in lieu, there's going to be an end to this at some point.
Right. You start packing up figuring out what to do with your things, because that means you're moving. Okay.
Yeah,
When,
especially if you have a complicated scenario, a lot of children, or
mm,
you've been in your home for 30 years, you've got a lot of stuff, or you've got a lot of pets. The
right,
more time you have to figure that out,
right.
the better likely you are to find a place that suits you.
When should people consider doing a short sale?
Once they realize that they're not going to be able to keep the property, they should be looking at, what do I need to do to sell? Even if it doesn't need a short sale, the sooner you sell, the more equity you're going to retain. If you're not paying the mortgage, you're losing equity every day because the interest is being charged, the penalties, the court fees, etc. And then if you realize that the property's not worth what you owe, or maybe just not worth enough to cover all the closing costs, if you're kind of thin like that, if it doesn't cover all of the costs and you don't have the money to come to the table with the difference, that's when you're looking at a short sale. So as soon as they realize that that's where the situation is, whether because they talked to the realtor and the realtor came back with what the current market is, and now they're realizing, hey, I owe more than that, that's when it's time to look into what a short sale is in their scenario. And a short sale is specific to that homeowner's circumstances. Who's their lender, what type of loan they have, what is their financial hardship, because we have to get the lender to agree. There's a whole process that we have to go through. There's a lot of guidelines. So the sooner we're investigating those things and determining what's the specific process we're going to have to go through for this homeowner, the better off we're going to be prepared.
And you take care of all that stuff, right? You take care of the paperwork getting submitted to the bank to see if the homeowner qualifies, things like that. Now, if someone has liens on the property or a second mortgage, what's the likelihood, or how, what are the other issues that brings to the table?
Sure. So that scenario is one of the reasons we want to kind of get engaged with the homeowner as soon as possible. And this is one of the things that we project to a real estate agent, our real estate community, is if you have a client who needs a short sale, contact us as soon as possible. Don't wait until you have an offer on the table, because we want to figure out, do title research. Are there other liens? Are there judgments? Are there other mortgages? Those types of things, because that does complicate the scenario. If there's other mortgages, that's really common. And typically the mortgage companies will, quote unquote, play nice with each other. They'll offer a little bit of money to, junior liens in order to get them to agree to release. But once you get into judgment liens, especially large amounts of judgment liens, it becomes much more complicated. There may be ways to get it done. There may not be ways to get it done. There may be other solutions that need to be brought into the scenario. So, you want to have that conversation and kind of be strategizing. What do we need to do to get from here to getting them out of the property, getting the property sold, getting the debt forgiven? What's it going to take to get that done, especially if it's going to be complicated by many other liens.
Now, a lot of people you work with are in some stage of foreclosure. Either their loan is in default. It's very common, I think, for people not to get to the point where they have to sell their home until they're behind on their mortgage by 3 or more months. And a lot of people, one of the reasons I wanted to interview you today is because in Connecticut, there's a phenomenon called a law day. We also do foreclosure auction, but a law day is when you don't have equity. Foreclosure auction is when you do have equity or you have an IRS lien. And these dates that the court has set, typically they're rolling, right? Typically every week there's law days and there's sale dates every Saturday and law days on most Mondays. And the court, because the courts have been closed due to COVID recently, the court has funneled all of the law days to July 7th and the sale dates to July 25th. And so I think the advice to talk to a real estate agent immediately, like as soon as you're possibly not going to have enough when you sell the house to cover the whole debt, is because the real estate agent also needs to look into the status of the mortgage at that time, and maybe there's a foreclosure case pending, right? So if somebody is facing a law day or facing a sale date, going under contract, even if it's going to be a short sale, is one way to delay and stay in the home a little longer, more time to pack up. Because short sales, how long do they typically take?
Most lenders take about 90 days to review a completed short sale application. And in most cases, you need to have the offer for the application to be complete. So they won't even start the review until you have a contract. And there's also national guidelines that most servicers follow, that if they get that application less than 37 days from a scheduled foreclosure date, they don't have to make any effort to review it. So right now we're closer than that to that July 7th date. So having an offer may give you a better chance of the court agreeing to postpone your foreclosure, to give you the time necessary, but the lender is typically not going to go themselves. Somebody like you, is going to be needed to help the homeowner get a motion filed with the court asking for the foreclosure to be postponed, so that the offer that they have can be reviewed, by the lender. And then we have to, make sure that hopefully if it is postponed, They give us enough time so that we still have more than that 37 days,
Right.
so we can immediately get that application to the lender. Now they're required to make a good faith effort to review it. It still takes them like 90 days. So even if the court only postpones for like 30, probably going to end up having to ask them for another one, but now at least we're able to get that process moving.
Right, right. I tell homeowners that if they're considering selling, at least list the property, at least, and any offer that comes in, at least, show it to me or entertain the offer, because that's fodder we can use and ask the court for more time. Because there's no sense in the bank taking over a property when the buyer, because the short sale is essentially the buyer, the homeowner bringing a buyer to the bank, right? It's I might owe 200,000, but my house is only worth 150. And the bank would have to find someone to cover that $200,000. What if I find a buyer for about 175, right? That's a better deal for the bank. And that's essentially what it is the homeowner living in the house, showing the house, and finding a buyer for the bank to cover as much of the debt as possible. So that process takes time. And so again, what's is that a benefit to the homeowner? How is it a benefit to homeowners to do that?
Well, short sale really benefits both sides. So you talked a little bit about the benefit to the bank. They're comparing what they're being offered in a short sale to what they think they would get if they had to foreclose, take the property themselves, and then go sell it themselves. And they know statistically they're typically going to lose less money if they do a short sale than if they have to go through the whole process and expense of foreclosing and then pay to manage the property while they own it, and then still have to find a buyer to sell it to. So if the homeowner's bringing them an offer, even though it's less than what's owed, if it's comparable or better than what they think they would get if they foreclosed and sold it themselves, then it makes financial sense for them to do it. And that's all they care about is numbers, dollars. That's the business that they're in. So for the bank, a short sale makes sense for them, provided that they see that the homeowner has a financial hardship, and which is the reason they fell behind, and that they're bringing in an offer that's at or very close to the current market value. And the bank's going to determine for themselves what they think the current market value is. Now, for the homeowner, the benefits are you don't get foreclosed on, so it shows up differently on your credit report. If you're not that far into your delinquency, you're typically going to have less of a credit score impact than if you're at the doorsteps of a foreclosure. And you'll usually qualify for a mortgage again sooner in the future if you've done a short sale than if you've gone through a foreclosure. And then the big thing in Connecticut is we're a full recourse state. So if you get foreclosed on, the lender has the right to pursue you for any remaining debt that's still owed. So, the numbers you were using, if you owe them 200 and it's only worth 150, they can still come after you for that other $50,000 if they choose to after the foreclosure. Whereas in a short sale, 99% of the time they're agreeing in writing to forgive that remaining debt.
All right. Thanks again this morning, Sean Wilder, the Short Sale King. He's located in East Windsor. You can find him at facebook.com/Sean P. Wilder, or just Google it and you'll find his business. I appreciate all the basic information about short sales. It's going to be really helpful to my clients and my followers on Facebook and YouTube. And again, thanks so much for your time. We'll talk to you another time, Sean. Thanks again.
Thanks for having me.